Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is JJ Kinahan, who's the Chief Market Strategist at TD Ameritrade. And JJ, with stocks up 33% from the late March lows, it's quite possible to see some consolidation at current levels, considering that we're coming out of the stream of earnings and going back to focusing on COVID-19 and macro.
Yeah, absolutely, Jill. I think the biggest thing for investors to look for right now is because the earnings season is largely over and many companies were so reluctant, and I won't say I blame them, to issue forward-looking guidance. What ends up happening now is sort of rumor-type trade. It may remind you of the trade that we saw about 18 months ago when it came to tariffs, because you do have COVID-19, you do have maybe tariffs, et cetera. So although the overall volatility, VIX being under 30 right now, isn't necessarily super elevated, I do think the opportunities for intraday volatility in terms of moves is elevated. You look between when futures opened last night and where we're trading today, the S&P 500s S&P 500 futures have already had a 60-point range, and this is on a day where it doesn't feel like we're doing much.
Yeah, that's a good point. And you also bring up something in your newsletter this morning, that if the optimism is justified, because analysts are continuing to say that the market has gotten ahead of itself, particularly if you think of the market as a discounted mechanism. So if the future growth and upward potential is priced in, there should be not a relapse, but more consolidation and volatility in June if we have already priced this in, getting those 30-35% returns in the market from the lows.
Yeah, absolutely, Jill. And I think one of the things that's really been interesting to me is to watch the divergence between the Nasdaq and the S&P 500. The technology stocks continue to lead the way, and whereas the S&P 500 continues to be weighted down. Pick your sector that's been kind of weighing it down a little bit more recently, be it financials, be it energy stocks, utilities, et cetera. Whereas the technology stocks in the S&P 500 obviously have performed well, because the Nasdaq is more tech weighted. It has done, much better as many of these stocks continue to grow. And I think that the story that may be being missed a little bit is the fact that whether we're at home, whether we're at work, technology is still needed. And in fact, in some ways, as we transition between this home and work environment, technology is needed more than ever. And I think that's why it's been able to hold up. That being said, these stocks, we seem to have at some point a little bit of a, I won't call it day of reckoning, but something where we have more equalized valuations as we see, is there a demand for all of these companies? Because without a demand for all the companies in the S&P 500, some of those technology orders start to slow down.
Well, it's interesting that you bring up valuation, which goes to my next question. The Fed continuing to insert itself along with the Treasury to keeping markets propped up. It's got to be really difficult for analysts to understand what valuation looks like.
Yeah, absolutely. If ever "Don't Fight City Hall" was true, it's under these circumstances. It seems to be an endless supply of money. Now we're taking a break for a while to see if this money can work its way through the system overall. But exactly to your point, in the fact that as businesses have some troubles, the Fed has been there to rescue them. I did think the fact that United put off selling some bonds this Friday, I found that to be very interesting, and we'll see what happens there in terms of demand, et cetera, for some of these companies, particularly those that may be a little bit more questioned right now, the travel stocks. But then you have the cruise lines coming out and saying that their cruises are sold out for the fall. So it's a true dichotomy even within the sectors themselves. And we have to see how this plays out in terms of all the money that the Fed is shooting into the system. And to your point, making it very difficult for analysts to put true numbers on some of these forecasts.
Well, speaking of the cruise lines, Disney in China opening up today, I think we're going to learn a lot from that.
Yeah, we are. I would expect it to be a little bit slow. I think that, and Disney, as we all saw in the news reports, doing everything they can to make sure that there is social distancing, et cetera, limiting the number of people there. Let's face it, they really, really would like this to go well and kind of need it to go well, even if what you're looking for primarily right now out of these parks for Disney is not growth, just stability. Can they operate at 25 or 50% of where they were operating before? Get that revenue back in the gates. And that's exactly what you want to see happening, is this being a very successful launch and just continuing to be moderate for a while. I think the street would more than accept that. Nobody's truly expecting growth in that area.
All right, JJ, thanks for the insight as always.
Always a pleasure, Jill. Thanks for having me.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.